Hello all, I hope you are well in these extraordinary times. I would like to welcome you all to the Fintech Finance Virtual Arena where we're hosting you today. In this special arena, we're going to be taking a wee look at Swift GPI. Joining me today is Eric Bail. Eric, am I pronouncing your surname right? Eric Bail? Bail?
You can. It depends if you're from the south of France or not, but otherwise it's fine.
I'll go with Eric Bail. I'll go for the south of France accent from Société Générale. How are you in London or in France?
In London. I've been in London for 10 years already.
Excellent. That's what we like to hear. And also joining me today is Edward Ireland from Bottomline. How's everything going your end, Ed?
Morning, Ali. Very well, thank you. Yeah, I live near Silverstone and I can hear the cars, so things are coming back to normal.
So racing is back on, which is good news for all the bet shops.
Yeah, no, and all the enthusiasts. It's really good.
Eric, what do you do? What is your job title? What is your day-to-day focus?
So I'm the head of a global transaction banking team in the UK. I'm in charge of the global transaction banking in the UK, meaning cash management, trade finance, and also factoring and supply chain finance.
Excellent, Eric. And yourself, Edward. What is your day-to-day focus at Bottomline?
So I work in our product management area, and my focus is on our existing customers and providing them with solutions for current market initiatives. One of which is GPI.
Excellent. Well, let's get straight into it and look at Swift GPI. I mean, right off the bat, it's now 2020. How has the uptake been globally? Where have we not seen as much movement in Swift GPI as we're expecting, and where have we seen almost more than we were expecting? Eric, did you want to take that off the bat?
Yeah, why not? With pleasure. Actually, I think that Swift GPI is a great initiative. And the reason why it has been so successful is because it's a win-win. It's a win for banks, and it's a win for Swift, and it's a win for corporates. It's a win for everyone. Why is that? Before, when a customer was making a cross-border payment and they had an investigation because the beneficiary was claiming non-receipt, the bank had to send messages to the different correspondent banks and wait for these banks to come back with a status. An investigation could take hours, or it could take days even sometimes. Now with Swift GPI, customers, they can know straight away where is the payment and if the beneficiary has been credited. Meaning that where yesterday we were spending hours on it, today we're spending 5 minutes looking at the tracker, sending a screenshot of the tracker, and the customer can see actually that the beneficiary has been credited on this specific date at this specific hour, and they also have all the details around the fees, the FX rate that have been used, etc., etc. So it's very powerful. And the other development is that it's moving to a self-care service, meaning that before, only the banks have access to the GPI tracker, and now banks are giving access to the tracker to their own customers. In June this year, we gave access to the tracker through our global web banking tool called Global Cash, and customers now, it's fully self-care. The same way that when you're doing an order on Amazon, you can track where is your product. Here you do a cross-border payment, you can track your payment exactly the same way. So that's very powerful.
Absolutely. That also seems, dare I say it, very, very transparent for the banking industry. Yes,
that explains the pickup. You talked about pickup. I mean, let's get some figures. These are the latest figures I have in front of me from Swift. From 2019 to 2020, so only in 1 year, we're talking about 450 members on this in 2019. It moved to nearly 900 in 2020. So we doubled the number of members. That's huge. Second figure, where in 2019 we had 56 of cross-border payments that were GPI, we are now at more than 65%. And the value of these GPI payments went from $40 trillion to $77 trillion. That's only in 1 year. So it's to tell you the scope of the pickup and the extension.
Are there any, in regards to that, are there any kind of geographical hotspots that we're seeing? i.e. we're seeing most of these take place on continents where there's a lot of different currencies, or is it more, transatlantic? Where geographically we're seeing some of this movement?
Good question. I think it's mostly in the most developed countries, on the most developed areas. So Europe, US, and Asia. That's the big spot. Europe has always very keen on Swift initiatives, on SwiftNet, meaning that of course Europe was the start, I would say. But then very quickly, banks like Citibank, etc., they deployed also GPI. Yes.
Excellent. Edward, did you want to weigh in on this in terms of where we're perhaps not seeing as much movement as we should, and where there's room for growth?
Yeah, sure. So I think where do we see the opportunity? So to Eric's point, I think in the beginning what we saw is the major cash management banks adopted this pretty quickly. It was a situation with cross-border payments that was behind the curve. It was relatively inefficient and not very transparent, and for plenty of very good reasons for those within the industry that understood the process, but not very easily understood by those who had to use the service and didn't necessarily understand the complexity of the payment chain. So I thought it's a brilliant initiative, and it got immediate adoption from the major cash management banks. And then, so the next challenge, and Eric's made reference to this, I think, in the recent big uptick in the number of institutions that are taking on GPI, is that we're now moving into the smaller banks, the medium-sized, small banks, financial institutions, and they're starting to adopt GPI as well. And that's where the challenge is. You know, the big cash management banks have the dollars to invest in this type of project. It gets more challenging as we get down to the smaller banks, but the benefit is still there for them. And especially when we look at those who are in the type of business that's very dependent on cross-border payments, then there's a real benefit for them. You know, you look at the FX houses, for example, a huge benefit for them in being able to use this service. And so that's where we're seeing the challenges, but also the opportunities in this mid-market as we go beyond the main cash management banks and into a wider adoption in terms of numbers. Although, as Eric says, the volume is already there. You know, the volume of the cross-border payments is already on GPI, but now what we're doing is mopping up the remaining volume with a larger number of users.
Absolutely. I think as well as more and more people use it, the for want of a better word, the installation cost obviously decreases as it becomes more and more widely available.
Yeah, and it becomes well known and understood, and there's more expertise in the market in how to deliver it. And it becomes easier when your correspondents know what you're talking about as well, and you're not learning for the first time. So yeah, it's a lot easier. And you know, competition has spurred this as well. So because this was an area of business that was relatively inefficient, then you know, the people in institutions wanted to take advantage of this. So there have been, Visa have come into this space, and other parties have come in and challenged Swift to make this process better, and they've stepped up with GPI. Absolutely.
Well, with that in mind, looking at the world today, I mean, for me personally, I have felt that this pandemic and subsequent lockdown definitely digitally has made the world a much smaller place in terms of digital business. I mean, we've been speaking with people literally all over the world that I wouldn't have been doing if it wasn't for the lockdown. Assuming that this is the case across the board, what does this mean if we were perhaps to see an increase in demand for payments outside of Europe and North America? What does that mean in terms of the infrastructure in places outside of kind of the usual channels? Eric, did you want to take that off the bat?
Yeah, of course. I agree with you. COVID-19 made the world more digital, clearly. I mean, everyone realized that we could rely on the digital to do better and to work better. The other thing that we discover in the payment world is that customers more and more want real time. They want security, they want real time, they want to track their payments. So it is very important to put the digital at the front. And we do see a lot of digital coming up. One thing we see a lot in terms of COVID, for example, is the electronic signature. We saw a lot of customers being very interested in being able to sign their document electronically instead of having to sign them physically. on send scans, on emails around. So e-sign is clearly a big topic. In terms of payments specifically, I'll be honest, I didn't see any change. I didn't see any more payments going cross-border or less payments going cross-border. I think it was roughly the same. I didn't see any impact on the Swift GPI. The only difference is that when you make a payment, you can track it better. That's all. But for me, there was no specific. The other dimension we need to take into account is the ESG dimension, environmental. Clearly we saw a lot of positive news that there was less pollution, that the rivers are clean again, etc. So humans are doing less damages. So perhaps, I hope, that COVID-19 will have a positive impact for that, and that corporates and humans will discover that using digital solution can help reduce the impact on the planet. For example, if you sign things electronically, you don't need paper. You could reduce the number of account statements. You could, so you have plenty of initiatives that could be taken to be more green.
Absolutely. Edward, what was your thoughts on that?
Yeah, to follow on from what Eric said, I think one of the things that the pandemic has shown is that there isn't really an effective manual process when everybody has to work remotely. So that's really highlighted any kind of manual process that people were relying on or couldn't find a cost benefit to take out has now come out and has needed to come out. And that's a good thing. You look at the data in the market about checks have practically disappeared, I think, in the UK almost now as a result of this. The use of card payments has shot up. Digital signatures, as Eric says, have become much more normal. These things have happened as a result of the pandemic. I don't think, to answer your direct question, I don't think there has necessarily been an increase in payment volumes, but the way that people pay has changed. Perhaps there's been a reduction in remittances globally, I think maybe, but trade payments have continued. So I don't think there's been an increase, but I think the way that people pay has changed and the way that people work has changed as well. So the number of downloads of internet banking apps, for example, has skyrocketed during the crisis as people have moved towards online as a means of working remotely. And also visibility has become key, and that feeds back into GPI. So when you're all working remotely and your organizations are dispersed, then visibility of your account balance stuff becomes really critical in terms of being able to have that online and real time, and being able to follow a payment through to its conclusion also becomes really important, and be able to see that the beneficiary's got the money. It becomes even more important, and to be able to see that online becomes important. The other thing that unfortunately has come out of the crisis that we've seen a little bit is that instances of fraud have gone up, and certainly attempted fraud has really gone up. And so I think by having electronic processes and electronic banking, it makes it much better in terms of being able to monitor for fraudulent transactions and to have that better visibility and to capture attempted frauds as they are attempted to be made rather than after the event.
I've got a wonderful bit of Czech trivia I've got to throw out there. The Sevenoaks branch of Lloyds Bank, in 2019, they handled more giant novelty-sized checks than actual checks. I love that because that's how decreased that is as a payment method.
And now, it's really gone away. And cash as well. So, cash will never go away completely, but certainly the amount of cash that's being used has gone right down. It's just not practical. People don't like handling it now, of course, do they?
Yeah.
One of the biggest things that COVID for me has highlighted is that people actually, they want to know what's happening. And by that, I mean, it's very hard to plan around things that you don't know. It's a lot easier to plan if what you're waiting on is bad news and you know that for sure. That was a very weird way of saying it, but if it's better to know something is going to happen, even if it's bad, than just the limbo. With that in mind, looking back at Swift GPI, what does this mean for cash flow management planning? What does it mean for their movement of cash? I.e., if you're an SME, only handling, say, cash? Is there no processing, clearing, delays, advances? What does it mean for what they can actually plan for the future?
Perhaps I'll take this one to start with. And actually, I have a very good transition for Ed after. So.
Oh, I like that. A nice link.
Exactly. So first of all, I don't think GPI is reserved for large corporates. It's for all corporates. Okay. So you have two parts in GPI. You have a GPI, the pure GPI between banks, and then you have G4C or GPI for corporates, which is the offer that banks offer for corporates. The point is more about how the corporate is going to use GPI. So for very large companies and large multinationals, they are perhaps going to have a more integrated GPI use. Launch the UETR from the payment, receive the GPI PSR at the end to reconcile all entries so that they have a full, I would say a complete loop of their payments. For SMEs, it's perhaps more manual, with access to a web banking tool where they initiate a payment and then they can have access to the tracker and monitor the payment. But what's going to be very different is what's going to make a change is the initiative of SWIFT. You have one initiative, for example, called inbound tracking. Inbound tracking is the possibility for customers to receive an alert of their incoming funds. So they are going to track their incoming funds. And this obviously is very important for them to manage their treasury, because whether you are a very large corporate or a small SME, you still need to manage your treasury. And if you are able to know exactly what's going to come your way during the day, well, you know what payments you can make, especially whether you're very large in treasury and you want to invest, or whether you're short in treasury and you need to be careful what you pay with the money you have. So in both directions, inbound tracking is very important. But all the GPI initiative, and that's my transition to Ed, relies on standardization of the format. Standardization on the format, and also the help and support of the vendors, because the vendors have a very important role to play to plug these APIs, the APIs and the GPI tracker, etc., to the customer solution. So this perhaps where Edward can say a word.
Yeah, it's interesting what you say, Eric. So when we look at the journey, so GPI is an initiative, and I think we understand what it does and we see the benefit of it. It's very interesting what's coming out of it as a result. So you've got the basic core capabilities of GPI, and that is improving the visibility on payments. But it's everything else that's coming out from that. So our clients are going from being kind of adopters of GPI and implementing GPI, but that triggers a whole load of improvements in the processes that they have and the applications that they have and the integration that they have. And they start, say, perhaps by just using the user interface and being able to track payments as and when they need to them being able to, as Eric and Sokchan can do, to be able to provide the corporate with a way to initiate a request, which then goes out to GPI and then back to them in an automated way. So we're starting to get an end-to-end process rather than an improved manual process within the organizations. And then, of course, what we've got this year, which is linked off the back of GPI, is the Universal Confirmations Initiative from SWIFT. And that's going to drive this concept of confirming when customers have received payments across all of the payments that are sent on the SWIFT network. So beyond GPI, so it's not about being a GPI member so much for the community now, because everybody's got to do it. Confirming when a customer's received their funds is going to be normal now. So you're not going to wait for the bank statements. You're not going to wait for them to tell you that they've got the funds. You're going to know that they've got the funds. And that's going to link through to your visibility of your positions, to your cash flow forecasting and your ability to plan your money. And then also, I think what's also interesting about that in terms of standardization, and with ISO 20022, which is the international standard which is being adopted worldwide across market infrastructures, is you'll then get the payment and the transaction much more closely tied together. So you won't see the payment so independently as people have been used to before. The payment and the transaction become one.
If I may add to Ed's comment about the universal confirmation, the good thing about it is that it's going to allow the tracker to always be complete. Because at the moment, if you send a payment to a bank that is not alive on GPI, your tracker or the metro line, we call it the metro line, is going to stop and you don't see the end of the metro line. With universal confirmation, whatever the bank, whatever the payment, you will see exactly the end of the payment, meaning every bank with a SWIFT release in November this year will have the obligation to confirm within 2 days, if I remember well, that funds have been credited.
Yeah, so it's taking this visibility beyond the GPI club and actually going to the full SWIFT community, which is a real step up. So, and that's by the end of this year. So we're going to see this pretty soon.
So gone are the days where, I think you mentioned there, Edward, 20 years ago when people were based to find out what is in their account waiting for the physical paper statements in the post.
Yeah,
yes,
and copies of messages and so on, and waiting for end-of-day statements with corporates. This is going away now. So we're moving much more real time, and it's happening quite quickly, and it's being driven by the initiative, and it's being driven by the competition.
Excellent. Eric, I saw a question from you on, I just want to make sure it's right. Why not have a system where payment could be issued from an instant payment scheme in one country, transferred to a GPI payment, and settled in another instant payment scheme? Why has this not been done? Because this seems, you can do it, you can pretty much do it with Bitcoin. So why is this not being done right now?
Well, that's the question around interoperability. And interoperability is linked to standards. We go always to the standards on the format of the transaction. The UETR, so the unique reference that you're going to use to track your payment, is the linchpin. Okay, so the UETR, the question is, where do you put the UETR when you reach the local scheme? So let's imagine you make a payment to the UK from the US. So it's going to leave one scheme to go into another scheme. If when it reaches the UK, you go to faster payment, in which field are you going to put the UETR? So this request first the schemes on each regional scheme or even local schemes to adapt first. Second, well, to define some rules around where we're going to put the UETR, how it's going to be reported, etc. So once you do that, you have some development, IT development. Who says IT development says money. Who says money sends delay. That's as simple as that. And the second thing is the standardization. I had mentioned the ISO 2022 migration, so the NTMX migration. Again, we're talking about a standardization of a message. Again, there are some work to be done to know exactly what information is going to be channeled and how. So whilst on the theory it is possible, the devil lies in the detail, always. And the detail is where do we put the information and how do we report it to the next scheme and to the customer. That's the problem. So I don't know, Edouard, if you want to complete that.
Yeah, no, Eric, I would agree with you. And the challenge is interoperability. And if you look at the different faster payment schemes or instant payment schemes, they've been developed at different times. They're developed in different standards. The faster payment scheme in the UK, which is one of the oldest ones, is built on a card standard. So it's not in the same standard as, say, TIPS is in Europe, which is based on ISO 20022, and a number of the other schemes are. So you've got this challenge of interoperability in terms of different standards being used. We're also talking about real-time payments here. So you're going to face challenges with balances and funding across countries and across markets and across institutions. So it is difficult, but I do also at the same time, I think it is coming. So the instant payment schemes are standardizing on the same format, which is a help. And there is increasingly more interoperability between those different schemes. We've seen with P27 in the Nordics, which is one scheme for a number of different currencies, which is going to go live so that you'll be able to settle instantly in a number of different currencies across the Nordics and including the euro. So that'll be quite interesting. And we're also seeing Swift, for example, are looking at how they can pull into GPI some of the confirms from these instant payment schemes. And so they're bringing in information off that is for settlements that are occurring off the Swift network into the GPI program. So we are seeing it coming, but it is more complicated and it's around standardization and the interoperability of the different schemes and the way they're set up to run.
Looking at that, I think interoperability, that is the core. Let's take a look at this from a technological level. What are some of the core infrastructures underpinning this, but also what are some of the core infrastructures that have very much nothing to do with this, that perhaps should do? Did you want to take this first, Edward, with your tech hat on?
Yeah, with my tech hat. So yes, in terms of infrastructure and capabilities, I think that some of the things that underpin it and need to be there and are getting there is that APIs are key. And in the early adoption of things like GPI, it wasn't really based on APIs. It was based on the old messaging rails and some fudging around different message types and databases. But now we're increasingly moving towards APIs and the use of APIs. And as institutions become more familiar with them and as we have to build out the API capabilities of the program, I think it's API first if you really want to get the benefit from the program. I think the other thing that's going to be successful is strong authentication. So we've got to be really clear about how customers can access these services and this information and the certification and the security we have around access. And so we have a role as a technology provider in making sure that the windows that we provide for accessing these services and the other services that we provide are really standardized, secure, and bank level security. ISO 20022, so we've mentioned this before, but I think this has to be the platform. So we have to work in ISO 20022. And what that does mean for some institutions is they need to look at the payment systems that they have. So not everybody can support ISO 20022 today. Not everybody can carry the level of detail that is required within ISO 20022. But the important thing to remember when you're looking at the adoption of ISO 20022 is that the level of detail that's being required by the standard is the level of detail that's being required by the market. So if your payment system can't deal with it, you've got a bigger problem than the standard. You've got a problem that you're not going to be able to service your customers in the way that you need to. And you're not going to be able to carry the information that you're going to need to. But I think that if you base your thinking on ISO 20022, your systems and processes are going to be right. And then the last thing that I thought about was that you've got to be able to work with trusted parties. So all this innovation is great, but I think that the recent situation with Wirecard, for example, has reminded us of just how important it is to really understand the parties that you're working with. You know, we can't do all of this ourselves. We can't build all of it ourselves, but we've got to be really careful who we work with.
The last thing I want to touch on is I want to look long term in terms of some of the implications that may or may not be obvious. For example, if the transaction ledger a lot more complete, does that then give better decision making for the likes of trade finance, for loans in the future? What are some of the unsuspecting long-term implications of this?
I don't know, Edward, do you want to start?
So I suppose from a technology point of view, what we're looking at is that if we can get better visibility for our customers on the payments that they make and the transactions that they're making and the detail within those transactions, there are other services and other capabilities that we can offer the customers off the back of it. So if you think about where we might be today, so for example, in the UK, we have a customer making a BACS payment. There's very little information that we can get from a BACS payment that really helps our customer or helps us to offer our customers anything else really around that payment. We can't see anything else. We can't see what they're buying. We don't really know when the money's going to arrive. We don't know what it relates to. Got no idea. So really we just have to process the payment. When we look at how payments are going to evolve and if we look at how GPI is going to give us better visibility on when that's going to settle and when it has settled, there are other ancillary products and services which we can then bring to the attention of our customers based off what we can see within that payment. So what I see happening, and probably I want to hand over to Eric more because he's more closely involved in kind of lending and banking, the banking side. But what I see is us being able to offer more services to customers off the back of the additional information that we've got. And I think from a banking point of view, there's going to be lending opportunities and better lending decisions that is going to be possible from this new world that we're moving into.
Yeah, there's the technology on one side, and then if you take you have a regulatory aspect and you have also the commercial aspect. In terms of regulatory aspect, you know that all regulators across the world want more and more transparency on what's going on in the payment. Okay, you need to know who is the ultimate originator, the beneficiary, and the ultimate beneficiary. With the ISO 2022, you can have all that in the payment, meaning that for banks and actually regulator, the more we move to an ISO 22 scheme or format or standard, the more transparency there will be in payments. That's the first thing. The second thing, we again go to standards, meaning that today we have different standards in different regions, in different countries, meaning that when the regulator or the bank wants to analyze the payment, they either need to develop their own tool, or they need to buy a tool, but that's a local tool to be able to track to filter and scan the payments. If we move to a standard, every payment will have the same format, meaning that you will be able to have, let's say, not a standard filtering and standard or scanning tool, but at least some standards in it that will be much more efficient for us. Instead of developing in-house tools that sometimes are costly and lengthy to develop, here you can perhaps go on the market. Let's not forget that banks, we are not software companies. Ed is a software company, meaning they will be very good at developing this type of tools. We will be very good at buying them and using them. That's the type of thing where we want to evolve. On the last thing, on a commercial point, I mean, the tracking of payment works both ways. It also works for us. Us as a lender, we want to know when the loan repayment is made. Okay, and obviously, when you have a team that wants to make sure the loan repayment has been done, they are an internal customers. They could have access to the tracker. We could give them access to the tracker. They can make sure that the payment is credited on their account wherever, in the US, in Asia, Hong Kong, France, UK. They can do that. So the last thing is big data. I mean, if we look at long term, everybody's talking about big data, data lake, having all this information. We know today that we have some companies like Amazon, Google that are very good at exploiting this data. Banks, I fear, are not very advanced or not advanced as they could be in managing this data. There's some progress, but still, again, we're not a software company, we're a bank. So, I mean, exploiting this data is not easy. But once we manage to exploit this data, I think it will give a lot of information around companies, corporates, their activity, their patterns, and of course, their financials, credentials. And yes, it will have an impact on the credit. It will go faster for retailers and consumers because you are going to have to develop some models that will calculate basically the capacity to reimburse. This is already in place a little bit. But even for large corporates, the credit analysis will be helped or at least supported by this type of analysis. So I think that globally, if we look at the long term, there are going to be some changes. It is going to be more digital. It is going to be less paper, for sure. Everything is going to go faster and perhaps, and I hope, with a standard, in a more efficient manner.
Excellent. Very well said there. Guys, thank you so much. I think we're kind of out of time there. Where is the best place to connect with you? Where can we find out more about you? Eric, where's the best place to connect?
LinkedIn.
Always there. And yourself, Edward?
Yeah, the same, LinkedIn and our new website.
Absolutely, LinkedIn all the way. Cool. Thank you very much, guys.